Hi, Mark. Welcome on this first series of LPEA interviews with the star speakers and influencers like yourself. So we're going to spend 10-15 minutes together. I'd like to introduce you quickly to our audience who's joining us live. So Mark is the CEO of Mangrove and the chairman of Wix, which is a NASDAQ listed company. Mangrove is celebrating this year its 20th anniversary, just like LPEA is celebrating its 10th. And I think now you manage over $1 billion in assets under management across a number of portfolios. Yeah. You're in Fund 5, if I recall correctly. That's and correct. Also, from what I understand, you've returned to your LPs more money than they ever committed to you.
That is also correct.
Great. And in terms of a more personal note, besides being a very distinguished member of LPEA as a GP, you are quite a mix in terms of geographies, which I will let you to go into. Although it's not the topic today, it's always interesting to know where people are from in terms of different backgrounds.
Well, first of all, thank you very much for having me, and it's an absolute pleasure to join you today. These times are trying for all of us, so the conversation should be interesting. I grew up in Africa, so volatility is part of my blood. We understand what volatility means, and being able to be nimble is important. So I landed in Luxembourg when I was 25 for the first time, and have been living there ever since. But of course, we invest today in Europe and in Israel as our two key markets.
Wonderful. So welcome on this talk show, if I can say. First one, you're a little bit of a big test for us. Very happy to have you with us. First question, Mark, is where do you place the start of this COVID-19 crisis, and what was the very first thing you did as a GP and an investor when it kind of came and hit us?
Yeah, the last week of February, I spent the week between Singapore and Hong Kong, and I came back from that trip telling myself, oh man, Europe and the US is going to be in trouble because we don't understand about social distancing, right? And when I came back that last week of February, Italy had already started. And for my point of view, it was, okay, this is going to hit Europe in a big way. And we started planning with our portfolios companies to figure out how and what they each should be doing in the context of this upcoming crisis. What we did was very simple, is we took our 40 or 45 companies in our portfolio. We kind of divvied them up into 3 categories. Category 1 was they had a lot of cash, and COVID-19 represented potentially an opportunity for them. Category 2 was they had one or the other of these 2, but they were somehow potentially at risk for COVID-19 because their business would not benefit from it. And category 3 was they were bad companies before COVID-19. They likely will be bad companies after COVID-19, and COVID-19 would be a way to accelerate, if you will, their demise. And so on the first 2 categories, my team and I have spent the last 3 weeks individualizing action plans per company to be able to tell ourselves either we're very confident about our portfolio or certain companies. And so I think this crisis is teaching us that we don't know the extent of it. We don't know how long it will last, but it is important for companies to have individually tailored plans. It is not all about just cutting costs and surviving. That is true for some companies. COVID-19, though, is an opportunity for some. Take the healthcare space. I think we have a number of companies there. We're seeing massive increase in traffic to their websites, right? So it's important. Entertainment, we have a French company called Sybel. I'm plugging it, I'm sorry, called SYBEL. It's all about voice content. And those guys are also seeing massive increase in content. So intuitively, the more time we spend at home, the more time we're going to spend online. And so I think those individual plans have to take into consideration these different parts. But taking it seriously is really what we've done from probably, the first of the month after I came back. Yeah.
Sure. So speaking of continuity, what is the business contingency plans and continuity plans you put in place? And do you see this opportunity as a short-term one, or is it something that's really going to be a game changer for your portfolio and the way you invest and the way you monitor your investments?
I think that for some companies, it's a huge opportunity, right? And there, the contingency plan is, don't save money, continue spending it aggressively, because if you do that well, you are going to be able to grow your business through the crisis and with the help of the crisis. It's true of our company called K Health. It's a artificial intelligence app which acts like a doctor. It's more accurate than a human doctor. And of course, right now with the worries around the world, people don't have time to go to the doctor. They're not allowed to go to the doctor. And a lot of the traffic is coming there and people are downloading the app. For some other companies, it's all about saying, well, if you're in an area that is about online advertising or things like that, or if you happen to be in other areas, you do have to be careful, right? You do have to be a little careful. But it is about, contingency. We as early stage investors, we do this on a quarterly basis anyway with our portfolio companies. It just so happens that COVID-19 has become so globalized that it is important to also remind some of the CEOs of our companies that this could last 6 months, 9 months. We don't know.
So how did you contact these portfolio companies, and what's your tangible plan to be in touch with them and monitor them?
We are all, our average holding in companies is about 20 to 25%. So we're always very big shareholders of the companies. And so that it's one phone call away from the CEO, and it's about sitting down with he or her and saying, we now need over the next 2 weeks to understand how you're thinking about the impact on your business. And it's also about financing, it's about capital, it's about staff, it's about a lot of things, and it's about putting all of this in a shaker and coming up with a tailor-made plan for a given company. Some companies, unfortunately, we are going to go through a number of employee reductions, right? That's the reality of some of our businesses who simply need the time to get past COVID-19. And some of the companies, it's more about hiring. So K Health, as an example, we've just announced we're looking to hire 500 doctors, right? Because we think this is the opportunity for them to grow. So it is a very close relationship you have to have as a portfolio manager. We're 4 partners in our firm, and so we manage all 6 to 7 companies actively right now, and it's a lot of time, a lot of energy with them trying to figure this out. We don't have all the answers. I can tell you, some of my investors are calling me up and saying, what's the impact, right, on the portfolio? And we're saying, look, it's much too early. We're less than 2 weeks into COVID-19 to be able to give you any indications as to what the impact. If you want immediate impact, go into the public markets. In the private markets, we have to take a little more time to analyze it to understand.
So that means we should have this talk every 2 weeks with you to update us every time and report on progress.
Yeah, I mean, so, look, I maybe.
I have room for one more question before we take a bit of a Q&A, if you don't mind. So looking a little bit forward, we don't ask you to look into the crystal ball that doesn't exist, but what is your take on what is likely to be the impact long term from a technological standpoint? Yes. And maybe you can tie this in with the fact that you have a blog, I think. The blog shows that you're a man of conviction. I started following you on Twitter and on the blog recently, which is how this idea came up today. So tell us about your vision, also using this to mention your blog, if you don't mind.
Yeah, I think, look, venture capital funds are long-term products. We're 10-year cycles. And so, any crisis, whether it's this one or the 2008 financial crisis, happens within the lifetime of that fund. I think long-term, I see absolutely no negativity for our sector. In fact, I look at my portfolio and today feel extremely confident about its long-term prospects. On the short term, I think we have 12 difficult months ahead of us, right? Because not only are we unsure between now and summer, who knows what happens in the autumn, and the reality is, what do you do? We don't know. We just have to plan appropriately for that. The convictions we have is that technology is going to continue to impact and change the world in which we live. We're seeing massive impact through healthcare like never before. Software is powering changes to antiquated healthcare systems. Voice is going to play a big role in the future through entertainment and commands. Fake products are just growing like mad online, and so there's tons of opportunities to help companies do that. And entertainment is going to be big. So, from a pure asset class perspective, venture capital tech has great days ahead of it. Great days ahead.
So you see this more as an opportunity. Is that what you convey in terms of message in your blog? Tell us about your blog, because I think it's called Dare to Dream or something like that.
Yeah, my blog is called Dare to Dream Beyond, right? And I blog ideas and thoughts that help me firstly articulate my own ideas. That's why I started blogging, because sometimes I need help to articulate my thoughts. I do it in writing and I share it with everybody. And in doing that, what I try to do is I try to challenge the status quo by saying, here is things that I'm seeing. So one of the blog posts I wrote recently was all about what are the early signs of success? We've been involved in Skype and in Wix and a number of other big successes. You know what? It's repeatable. You can see it regularly when things start working out pretty well.
There's a pattern of success.
There's a pattern. There's a pattern recognition, right? Right now, what I'm writing about is trying to be positive around the whole COVID-19 thing. I'm tired of listening to all the negativity. It's true, it's sad, it's bad, but there's also champions. Schools are one of them, right? Schools have kept our family sane. My son's school has tele schooling, keeps him busy from 8 to 4, keeps the family sane. Leadership is another thing I write a lot about. In Singapore, the one thing I took away from that is the prime minister of that country communicates unbelievably well with his people. I would say that's something some of our leaders could take an example on. More
That's wonderful. I'm sure we'll have you back. So let me relay the Q&A.
Sure.
I'll start with one question which we talked a little bit about before the interview. What's your view in terms of early recovery in Asia, and is there any impact? I know you invest in Europe and Israel, but today is a global world. Do you have a view on that?
Yeah, I have a view that Asia is a proxy for us, right? It's taken them 2-3 months to get through this problem. What we're seeing is their economy is taking up again. And hopefully that's going to come our way. How long that takes, is it 3, 4, 5, 6 months? I have no idea. But when I'm talking to my tech colleagues in those regions, they're saying consumption is starting to come back, activity is starting to come back, online is big. So my sense is once we get past the initial scare of this whole crisis, you will see the tech sector blossom and continue to blossom as more and more of the economy just moves online. Asia for us is a proxy.
Okay, so you're an optimist, but a fact-based optimist. We like that. Yeah. Other question from an investor. Do you think that your LPs will become more cautious in terms of your potential capital calls in the future?
I don't right now. I don't anticipate my LPs trying to throttle our capital calls, if that's the question, right? I think that we did not see that happen in the 2008-2010 financial crisis, when liquidity for our LPs was a much bigger issue. Right now, I'm not hearing anything from my LPs that would suggest that for us, right? Perhaps other funds are seeing this, but I don't think now is the time to stop supporting your companies or stop investing. Our best deals historically have always been in economic downturns, right? Always.
Yeah,
because the market trend.
Sorry.
No, because the market is empty of investors. What we're seeing is, for sure, that venture capitalists and PE are freezing their activities. And so there's going to be a drought in liquidity in the market probably until September is kind of my take.
It's a perfect transition to the last question, Mark. Mark, I mean, is this going to impact your pace of investing in new companies or follow-on rounds or?
Yeah, absolutely. I mean, I think that in investing in the crisis without really understanding it or understanding the duration of it is irresponsible. And so we will likely take the notional view that, we need to look, let's stick around for a couple of months before we do anything crazy. Let's see what happens post some of these periods of confinement. And see what happens to the economy before throwing out significantly more investments. Yeah. We're closing some investments that we've committed to. We're not renegotiating those. But at the end of the day, one has to be prudent, right? I think that's what we're
Another last question, Mark. You said earlier that this was an opportunity, but some companies would suffer. Can you say which ones do you see as suffering? Because you mentioned more the ones that will benefit from this
Look, I mean, a venture portfolio usually has about a third of its companies that are struggling, right? And we're no different. And that third is struggling, and they're in all sorts of sectors. And that's what I mean. They were bad coming into this to this crisis.
So you don't look at it by sector, actually.
Well, we do also look at it by sector, but some of the sectors we've not invested in. So I'm going to be careful about what I say, but I'm not sure financial services is going to come out of this in great shape, particularly in the tech side. I think a number of things have happened lately to remind everybody that fintech is great, but financial services take more than just tech, right? And that's not so easy for tech companies. But so I think entertainment will be good. I think that e-commerce is struggling also. I think if you're invested in anything around e-commerce, Amazon's doing great, but nobody else is doing well, right? And so there's going to be there's going to be some things happen poorly, but I think it's the bad companies in these times get flushed out faster than they historically have.
So it's a purge.
It's a purge.
It's going to be a purge. And that means we're going to have you back in a few weeks telling us what happened then.
Well, I hope I come back in a few weeks and that we have more visibility on confinement, more visibility on consumer behavior, more visibility on what the governments are doing. I'd say the big unknown going forward is no longer what's happening in Europe. I think we have reasonable visibility on that. It's really what's going to happen in the US when a lot of the negativity starts mounting. Right now, you've seen the US government has been, pumping a lot of capital into the market, but they haven't really felt the full impact that we are starting to feel in Italy and Spain and some of the countries. So that's the big unknown on liquidity, I think.